Are you planning to start a one-person company in India? What's happening, guys? I'm Ashish Prasad, and in this video, I would like to help you understand how to form a one-person company in India in accordance with the Companies Act of 2013. We will take a look at the requirements, the procedure, the benefits, and also the downside of having a one-person company in India. One-person company or OPC is a fairly new type of business entity added in the latest 2013 amendment of the Companies Act, with a focus on the proprietors running their businesses. This is to help limit their personal liability forming a company and also to create a perpetual organization unlike a proprietorship. Now you've got to remember, company by definition helps you with limiting your liability, separating personal from business liabilities. Company can also build better credibility as all the details of the company can be verified online at the Ministry of Corporate Affairs website, which is mca.gov.in. If you're new to this channel, we are creating a series for startups called Startup 101, so make sure you subscribe to this channel and hit the bell icon to get notified to all the latest videos from SOFTRE. We will be sharing more videos on a topic covering startups that would help you scale your business. This week, we are focusing on company formation and choosing the right type of business entity for your startup. I recommend you to check out our other video on forming a private limited company before you watch this. The link is available in the description below. So what exactly is a one-person company? Well, it's exactly as it sounds. One person or one director company that is run and managed by a single person who is the director and shareholder, similar to a proprietor, but with limited liability. To start one, all you need is a minimum of one director and one nominee. After an amendment in 2015, there is no mandatory requirement for a minimum paid-up capital in one-person company formation. However, the government fee must be paid to the government for issuance of a minimum of 1 lakh rupees as authorized capital during the incorporation of the OPC. Bear in mind, there is no requirement to show proof of capital invested during the incorporation process. Moving on, the registered office address can be anywhere in India. What's good is that the registered address for the company can also be your current residential address if you don't have an office or a commercial space yet. Let's understand who a director is now. Director of an OPC is the manager of the company who will take the duty of looking into the day-to-day operations of running the company. You might be wondering how an OPC is different from a proprietorship firm. To quickly explain, a proprietor will use his or her personal PAN to open a bank account or a current account, while an OPC, you will receive an additional PAN card in the name of the company, where it separates business liabilities from your personal assets. Let's dive deeper into the formation of one-person company. An OPC is more or less a replica of a private limited company with only one director instead of two directors. When it comes to compliance, OPC is going to be following the usual MCA compliance, just like a private limited company. Moving on, to form an OPC, the very first step is to get your digital signature certificate or DSC for the promoter of the company who is also going to be the director and shareholder. If you're wondering what DSC is, it's simply an electronic signature in a USB token. This is going to be used for signing the applications and company-related official documents later. So keep it safe and be careful before you share this with anyone, as DSC is as good as a physical written signature on a sheet of paper. The next step is to obtain the Director Identification Number or DIN, which is a unique number allotted to every director of a company from the Ministry of Corporate Affairs. The DIN is going to be mapped with your PAN card and it is going to be only issued once. It is a punishable offense to hold more than one DIN. Then an application to reserve the proposed company name is made. You can provide two alternate names with the application. Please remember that the Register of Companies has complete discretion in the name approval of the proposed company name. You also need to bear in mind that the naming guidelines has to be followed with your proposed company name. The name of the company will be in the form of company name OPC Private Limited. Once the name is approved, you will have 20 days to file your application of incorporation of a new company, or another application is to be made by paying an additional government fee. The final step is to apply for the certificate of incorporation by online submission of SPICE form, or simplified pro forma for incorporating company electronically with signed copies of MOA and AOA. If you are wondering what MOA and AOA stand for, Memorandum of Association of Company, or MOA, prescribes the scope of operations of a company by explaining the main activities of the company, whereas the Articles of Association defines the bylaws by which it conducts the operation and administration. Both documents have vital importance and shall be drafted very carefully after consultation with a professional. Then the documents are uploaded to the government portal on mca.gov.in with the DSC of the director and the practicing professional. On verification, the Register of Companies, or ROC, will issue a certificate of incorporation, and the OPC can commence business by opening a bank account by depositing the paid up capital. When you go visit a bank to open a bank account, you will need a copy of AOA and MOA along with a copy of PAN card of the company and certificate of incorporation of the company, which are all available as PDF documents just after incorporation. Going further, we will focus on the rules to follow as a one-person company, the advantages along with the disadvantages. Now let's take a look at what the governing rules are for an OPC. Only a natural person with Indian residence can form an OPC. This applies to both the director and nominee. So an overseas national may have to form a different corporate entity like a private limited company. There is no requirement for minimum paid up capital, but the director should at least hold one share of the company. For example, if the company is formed with an authorized capital of 1 lakh Indian rupees, which is the base amount required, if the face value of a share is set at 100 rupees per share, which can be decided by the promoter or the director, and the director is only required to get at least one share by making an investment of 100 rupees only. An OPC can be converted into a private or a public company. Now let's take a look at the benefits of having a one-person company. OPC is considered a separate legal entity, and it limits the liability of the promoter or director. The entity is verifiable online on the Ministry of Corporate Affairs. Another advantage of having an OPC is that the liability is limited to the extent of the worth of shares held by the promoter, or the individual can take more risk without worrying too much about the loss of personal assets. Lastly, the minimum requirement of one shareholder, one share, one director, and one nominee is all you need to start a one-person company. But that being said, it also has a lot of disadvantages. A tax slab of a regular private limited company still applies, which is, in my opinion, quite ridiculous and pointless to go for an OPC, as there are a lot of restrictions. An OPC will only support small businesses. The requirement of being a resident in India to be a director or nominee is the person should have stayed more than 120 days in India. The director can only be able to form a single OPC till it's dissolved. Also, an individual cannot be a nominee in another OPC. Lastly, an OPC is still bound to the stringent compliance requirements for keeping the company operational, which can be very expensive. From a personal perspective, I feel OPC is far from perfect, even with the changes from the 2021 amendment. It would be a better investment to start as a private limited company, as the disadvantages outweigh the advantages by far. That's a quick look at one-person company. Hope you learned something new. If you did, make sure you subscribe to our channel, and if you have any questions, leave it in the comment sections and we will be in touch with you soon. Until then, stay safe and see you on the next video about public limited company.